Hello traders, Gary Wagner here, approximately 1 o'clock in Honolulu, Hawaii. It is Friday the 7th day of September, and this is the daily report for silver, our weekend review. We did get a modest close to the downside today, and the market closed off, ended up on our spot market at 31.13, and in terms of our December silver, we closed at 30.99. 30.99 basis the COMEX December contract of silver. The interesting news is when we look at the gains on the week, we saw silver have a very, very nice showing, roughly a 3% gain on the week. When we look at the candlestick pattern that it created a multitude of patterns. First of all, even though it's a small body, it does engulf the prior body. First pattern that I noticed. The second thing is that as this market came down, it is a defined downtrend. We can make no mistake about that. You get this doji-like candle forming in the star position, and then this would be confirmation. It is roughly a variation off a three-river morning star, and the big difference between it is on a solid three-river morning star, you would get this candle, which would be a green candle, to be a candle. Now, although this particular candle wasn't that large, it's not that large in relation to these other candles, these other days where we had tremendous corrections, tremendous sell-offs. Consider the low that we got here at $26 last week. We have drastically been able to move up and above that. And that, to me, is very significant. You know, traders, we've been talking about the fact that as we have been looking at this market, it has been forming a base. Although we've seen these lows carry well below this 61%, and that's 29.50. I believe that to be a critical number in the silver market currently in terms of support. You can see that it absolutely formed a base. At the same time, our next level, which is 33.38, which is our 50% level, you can see that it made one attempt and failed on two other attempts to even breach or come close to that high. When you take a look at some of these matching, these are the lows, and you carry them over, you can see where support here has absolutely become resistance here. And the way I like to look at it is one man's floor is another man's ceiling. Traders, we are looking at a daily chart. It is of the COMEX silver, and it is in Henkin format. You can see that over the last couple of days, it has gone from very much a bearish market and has given us our first indications of a bullish reversal. And that is a very good sign in terms of the Henkin candles. Now, when we take a look at the S&Ps, the stock market, you know, it was under pressure, came down to lows. We had these three up days. Friday's activity is a dark cloud cover in terms of the candlestick pattern that it had, and it did close lower, but well off of the lows of the day. And the last chart that I do want to look at today is our dollar index. We have been following this closely for some time, but in particular interest all week. Doji caps the bottom, market begins to trade higher, a doji caps the top. We get follow through to red candles, meaning lower closes, and today we got a hammer. Now, a hammer after a downtrend is a significant potential to give us a bottom reversal indicator. What is the psychology behind this particular candlestick? Well, when you look at it, the market opens, and then during the day it sells off drastically. In other words, you get this long tail, but at some point buyers come into the market, pushing it back up and pushing it close to the open of the day, and that's where you get the small body. It is called a hammer because the belief is that you are hammering out a bottom within the market. You do not take this type of a candlestick without a confirming candle on the following session. So we'll see what happens through next week, if this market is going to find support again or if it will continue to trade lower. Lastly, traders, when we take a look at this 31.85, which is the upper end or our resistance that we are currently at, you can see that as the market traded higher, straight candlestick chart, we get tails above there. It's called a scouting party. However, except for this one area where we got a close just at and no follow through on the next day, meaning today, you can see that we are forming, just as we are in gold, kind of a rounded bottom. In gold, it's more of a V shape, but we're absolutely getting support in this area. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.